In this video, I'm going to show you something no other covered call or dividend investors show you on YouTube. I'm going to show you my February 2024 results. Absolutely kicking ass. And I'm going to show you how I'm doubling my house payment and I'm creating a passive income stream using covered call writing, buying dividend paying stocks, knocking it down in this stock market. Stick around. I know you're going to like this one. Hey, welcome back everyone. It is time for another red hot cover call video. Well, that's right. Today I'm going to show you something most YouTubers do not show you, their monthly results. You know, I love to go to YouTube and dial up some covered call writing videos, and they always show you what you could make. Oh, make $1,000 today or $1,000 tomorrow. If you go to my channel, the one thing that you'll notice is that I show you exactly what I do. Not hypothetical trades, not you could do this. It's what I do. I'm going to show you what I've done in February of 2024, for which it was my biggest month ever. And I'm going to show you the breakdown of how those trades work and what we did. Then I'm going to show you a stock trade for which I do every single week to generate over $1,000 a week. And we do many of them. Because when you see the numbers that I'm putting up, you're going to sit there and say, this can't be real. Well, what I'm going to show you are the trades that I do, and yes, they are very real. You can do this. And I'll tell you what, we take those covered call premiums and we buy dividend paying stocks, taking a semi-passive income investment strategy and turning it into a passive income strategy, generating money, not doing anything. Hey, that's the American dream, and I'm living it. And I'm going to show you how I double my house payments. So look, let's go ahead and get to this. Oh, by the way, look at all these videos where they tell you you're going to make $1,000 a trade and this, that, and the other, yet you never see their results. But I'm showing them to you right here, right now. So what I want you to do, if you like anything you hear, I'm retired. I retired December 2022, and I was 55 years old. We had a 9-to-5 for 30 years. We walked away from the 9-to-5. I could have worked longer, made more money. We decided to become a professional stock trader. And that's what I do now. I literally move numbers to make more numbers. And we do that selling premium, writing covered calls, selling cash secure puts, and investing in dividend paying stocks. Now, at the end of the day, you may or may not like the way I do it, but what you're going to see is how I do it. And that is the absolute secret sauce to most every trader that's looking to get ahead. You have to see it a couple times, then you feel it, then you want to do it, you'll learn about it, and then you'll get off the bench and you will start creating your own success. So hey, look, if you like anything you hear, subscribe to the channel. It's right there, it's free. And hey, look, if you like this video, bang that like button. It lets me know you like what I'm doing. And what we're doing is this, I'm showing you my results first. You know, we have a couple things to get through here. Grab yourself some coffee. This is not a short form YouTube video. And if you have a short attention span, well, you're going to be in trouble because I'm going to show you 4 things. So I want you to stick around if you have the patience. And at the end, I'm going to show you what I'm doing with my house payments. And you could probably guess what I do, but stick around. I'm going to show you. Now, here's my February results. And as you can see, February is over. And February brought in some $35,000. Now, I'm going to show you how I did this. The numbers are ridiculous and they are real. These are booked trades. These are not trades that are in the ether. They're still on. I coulda, woulda, shoulda, or I did it on paper. These are trades that are over. The money's on the table. That money's either gone into other investments, dividend paying stocks, or I paid the bills. When we sell premium, that's what we do. We absolutely make money so we can spend it. It's called selling premium. We literally generate cash flow from nowhere. See, if you haven't heard the cover call strategy or the cash secure put strategy, that's what we do. See, investors that own a stock, they will own that stock and it will go up and down, up and down. And unless that stock distributes a special dividend or pays dividend, you will never see a nickel of money from that stock. But see, I can take that stock and we can generate cash flow literally from nowhere by writing a covered call. And when we're given that cash, we take it and buy a dividend paying stock. And that stock will pay a dividend, which is my cash printing machine. See, if you've been following me since 2016, this is the theme. We invest to make money, and we take that money and we put it back into the investments, generating cash flow that we otherwise never would have had. Over the years, I've done videos talking about companies like 3M and Bristol Myers, where the buy and hold investor would have moved up and down and maybe collected a dividend here and there. But by writing covered calls, I've been able to beat that buy and hold investor with the same stock during the same time frame, hands down. I think one example, this buy and hold investor would have made nothing, stock literally trading back where we started, yet I put over $10,000 of cash on the table. Look, learn how to write covered calls, sell cash, secure puts, whether it's from me or somebody else on YouTube, just do it because it empowers you to generate the cash that you could use to invest in dividend-paying stocks. You hear people on YouTube, I retired on dividends. I make millions in dividends. Well, they have to have money to buy dividends, and you don't have money. So how are you going to do it? You're going to use your stocks, write covered calls, generate money, then buy your dividend-paying stocks. So let's go ahead and take a look real quick at the breakdown of my February numbers. Now, real quick, this is just my P&L. This is the total income tracker for which you can download it at cptdashboard.com. Click free spreadsheets, get your own total income tracker. For the most part, you enter the trade on this side, and then it will close out on this side. We open and close trades. We then take that trade, drop it down into the closed trade area, put it in the month tab. Now you tabulate all those numbers you saw at the beginning of the video. Well, this is just a breakdown, and you could see that I do a lot of trades. And I do a lot of covered calls with the poor man's covered call. So I own shares, and I also own leap call options for which I write covered calls. I give people the right, but not the obligation, to take my shares away from me, and they pay me a per share premium to do that. And I've been doing that all month to the tune of some $35,000. And you can see we don't win all the time, but we win most of the time. The covered call strategy, there's 3 outcomes. You win twice. If you don't mind owning a stock that has fallen a little bit, well, the third one, you won too, because you still own the stock. So the covered call investment strategy allows you to generate that cash flow we talk about, and I do it to the tune of some 33 trades. Now, you don't have to trade as much as I do to generate this kind of money. This is an individual trade for which you can do. And wouldn't you like to make $450? Well, that's one trade you could have done. And you don't have to do it every week. That could be a 30-day trade every 30 days. And you don't have to pick one stock. You could pick multiple stocks. So the covered call strategy is very flexible. You could pick multiple stocks from the S&P 500 and write covered calls against those stocks. February turns out to be my biggest month ever. Let me show you the breakdown real quick. Now, members get this. I do have a membership. They get to see all my trades. In fact, you could see them over here where all of my trades are posted and all of the members see them. Whether I'm in or out of a trade, doesn't matter. They see it. You could think of that as being a trade alert. So think of that. 33 trade alerts in a month that had 29 days. Now, what I love to do is this. I love to post up the total month-end report to see how I'm doing. And clearly you could see, using a bankroll of about $500,000, we are able to generate some $34,000. And we are knocking it down, having a positive month. Now, if you don't have $500,000, that's okay. Do you have $5,120? Well, if you did, you could buy a stock that's trading under $51. You could buy 100 shares because you have to have 100 shares to do a covered call, and you can generate cash flow. Look, don't look at the numbers and say, well, buddy, it's because you have all this money. No, dial it down to where you're at. Do you have 500? Do you have 50? Do you have 5,000? Writing covered calls, all you need is 100 shares of an optionable stock, and you are in the game. That's the key. If you want to build wealth, you have to be in the game. You can't be a real estate investor if you got $5,000, but you could be a covered call writer. And that's going to start you on your journey to wealth, right? Building wealth. Yeah, you may take that money and pay the bill. You might take that money and pay half of it with a bill, and then the other half go into savings or a dividend stock. But you're starting to build wealth because you're doing it. How many people right now, listen to this video, are out there sitting on the bench? They don't have a nickel to their name. They want to be there. Well, if you step up and you're able to buy 100 shares of an optional stock, you get yourself in the game. And I believe get your education, get your experience, and you'll be just like me. Come 3-4 videos that I do, you won't need me anymore, and you'll be out there having your own success. So let's finish this up. All these beautiful green trades, and in fact, these trades right here where I lost money may have been a buyback. I wanted to buy back an option so I don't have to give anybody my shares, and then I wrote another covered call making money somewhere else. The options game is very flexible, and we sell, sell, sell. We sell the contractors to all the gamblers. And that's why we're able to generate those huge upfront premiums, kind of like an insurance company. Now, real quick, the breakdown is simple. We have made $14,000 on covered calls. Only did one cash secured put in a month. We did quite a few poor man covered calls, making about $8,100 on those trades. And we had a stock sale and a leap sale, knocking down some $8,700. Little tiny dividend there. That breaks down how I sell premium throughout the month. Now here is the very impressive chart. You could see since 2020, and I could go back here all the way back to 2016, the numbers progressively get higher as we get better. And to be honest with you, as your bankroll gets bigger, you can start to make more money. And I admit that. We're using $512,000 on average. So yes, my numbers are going to be big. But look, take away from this video this. I started with one trade, and that trade was one stock, and it was valued at $8,700. So I started with one trade, and since 2016, I have found myself working and grinding and working and grinding, and here we are. So do not give me that in the comments, but you got all this money. No, I worked my way to where I'm at now. I show you the numbers here to inspire you and motivate you that you can go from here to here if you do it right. And I'm pulling for you. So 2024 turns out to be my biggest month. But real quick before we move on to that trade that I'm going to show you, did you notice, and I think you did, it is March 1st. Look where we're at. March 1st, we are ready, knocking it down with a huge covered call close on coin, and we sold the shares. Now, the way all of my profits and losses are marked, I have a portfolio that sells premium. Anything within that portfolio that sells premium gets marked. And when we make $14,300 on a stock sale for which I use the stock to sell premium, we mark it. And I also take losses, like my Square trade last year, losing some $37,000. We win, we lose, but we stay the course. That's what I need you to understand. We win, lose, and draw. We do not find ourselves in the fetal position when we have a bad trade. And hopefully, showing you all my trades and how diversified I am, hopefully you're able to be diversified so one trade doesn't wreck your portfolio. Let's go ahead and talk about those trades where I make a couple $1,000 a week. We're going to talk about the in-the-money weekly covered call. Now, for a lot of you, you might do a 30-day covered call or have heard of a 30-day covered call. A lot of people like to do that because the 30-day covered call usually represents a 3% cash-on-cash return using one of the great S&P type companies, meaning we can buy the stock, maybe write an out-of-the-money strike, meaning we buy the stock at 100 and we're going to give somebody the right to take them away from us at $102, for an example, and then we're going to collect $2 in premium, and we're going to give them 30 days. That's your typical 30-day covered call. We would make, in that case, about 4%, $2 on the stock move and $2 in the covered call premium. They would take our shares at 102, deposit $102 per share in our account, and we would have the $2 of premium in the account. That would be some $4 additional that we didn't have prior to buying the stock. That $4 additional could buy dividend-paying stocks. That is the cash printing machine that I usually talk about. Now, I have come a long way where I used to do only the 30-day covered call, but now we focus on the short-term 1-week covered call. And as you can see, I do the in-the-money strike. And I'm going to explain this here. We're going to go to the chart, so I want you to stick around. We are talking about using the in-the-money covered call. And you can see the example here with SMCI. We went ahead and bought the shares at $913. I went ahead and gave somebody the right to take them away from me at $820. That is very deep in the money in the covered call premium. And that's called intrinsic value. The difference between $820 and $913 would be intrinsic value in the option. Now that option, I got paid $105. So looking at the very simple math to make this very clear, and by the way, this is a calculator you can download from cptdashboard.com, get your free spreadsheets. I bought the shares at $9.13, I did 100 shares, and I gave somebody the right to take those shares away from me at $8.20. They paid me $105. Now, on money invested, you're going to find that's 1.31%. $105 sounds like a lot of money. But the reality is, and it goes back to what I mentioned, between $9.13 and $8.20, that's called intrinsic value. There's no money to be made there on either side of this trade. It is just the difference between where I bought it and where I'm giving it away. Well, the call buyer has to pay me that. So of the $105, 93 of it is intrinsic value. We cannot calculate that as profit, but the difference between 93 and 105 is $12 per share. And that is my true profit. So when I calculate this trade, we have to calculate it where $93 is intrinsic value, but I make nothing on that because I'm giving the shares away considerably cheaper. And they are going to be taken away if the stock does not fall below $8.20 in 1 week. Well, that turns out to be a beautiful $1,200 profit. It's 1.31% on 5 days. That's truly the measure of a great cover call writer. We're looking for the money, and the money looks good, making $1,200. But really, I want to make between 1.2% and 1.7% in a 5 to 7 day trade. And this one sets up as a 1.31% trade. Let's go ahead and take a look at the other one. You could see that we did coin, and coin is the same deal. Trading at 206, I gave somebody the right to take my shares away at 190. They paid me $19.77. This expires this coming Friday. I did 5 contracts. That's going to put $1,800 in our wallet. And when we bring that calculator over, you could see when Coinbase was trading at 206, I did 5 contracts or 500 shares worth, where I gave somebody the right to take my shares at 190, and they paid me $19.77. $16 of the $19.77 is intrinsic value. Remember, I'm giving away my shares much cheaper, but it's at $3.77 for which I pocket as premium. And that's going to equal on 500 shares $1,885 in 5 days, or 1.83%. This is how it works. We use the covered call to generate that positive cash flow. There are many ways to do this. I just choose to use the in-the-money strike. I know some of you will say, well, I do the cash secure put. And that's very similar to what I'm doing, where you will put up the cash to buy somebody's shares, you'll give them a time frame, and you'll get paid a per share premium. But you don't actually own the shares until they put them to you. And real quick, you could see right here, all of these trades are on the books right now. These are my current trades for the month of March. And this will fluctuate largely because I have a ton of rotating expiration dates. You can see I have many expiring on the 8th, the 15th, the 22nd, and the 28th. We're doing this every single week, every single month. And now what I want to show you is something that I do. I want you to focus right here, where every time you see this column right here filled with a date, what that means is I took these cover call profits and I went ahead and bought equivalent amount of shares in a dividend paying stock. So that has been something that I have been doing for a bit now. Every time you see a date in this column, that means I took the profits and I bought a dividend paying stock. Now that's going to be that passive income we talked about. So let's go ahead and talk about my most recent purchase and the stock that I bought. Now remember, go to cptdashboard.com. If you want your 1 free month offer on my membership, click Upgraded Dashboard. If you want your free spreadsheets, Total Income Tracker, or the In the Money Calculator, go ahead and click Free Spreadsheets. Get your free copies. And I encourage everyone to at least keep your numbers in front of you. Use the free spreadsheets. Keep the numbers in front of you so you do not make a mistake. So here's a recent covered call for which I closed and I bought a dividend paying stock. You can see it right here where I used the TQs, and this closed out on March 8th. So this was just last Friday. We made $770 and we went ahead and we bought a dividend paying stock. I want you to focus up here at the top of the screen on what that stock was. We went ahead and used $692 of the $770, and we bought IWMY. Now, it looks like I bought about 40 shares. Let's go ahead and take a look at IWMY. Now, again, this is a dividend-paying stock. In fact, they pay monthly. It's an ETF, and it is an ETF that uses the Russell 2000 to generate its dividend monthly. And they use options daily, meaning they are in and out of the position every single day. So what I want you to do is, I want you to research all of your dividend-paying stocks, but what I want you to research is not how much they pay, and not how much they pay. You need to know what they do to distribute that dividend. See, if you don't understand what they do, that's where you fall into trouble. See, I know what they do because I'm in the options game. These dividend-paying ETFs that use options only, it is going to be one of the biggest monthly dividend stocks that investors will absolutely run to because they can pay much bigger distributions. And what I'm going to tell you is this, they use options so they don't truly have a position. Now, what you're hoping is that this company, Defiance, will take some of their money that they make and drop it into some securities so they keep the NAV up. And basically what that means is your net asset value so the stock doesn't keep tumbling all the way down to zero. Now, I don't believe that's going to happen, and I'm going to keep investing. And granted, the stock is falling. If you remember, every time you distribute a dividend, the stock has to open ex-dividend. Now, they pay some massive dividends, and I'll tell you what, this is $1.29 in February, and for March, they're paying $1.11. Where are you getting $1.29 or $1.10 for a monthly dividend payment? You're just not. Options allow these type companies to do that. Companies that use covered calls on stocks like the NASDAQ, they can offer higher returns, but a lot of times they'll take that money and they'll put it back into those stocks so the NAV is always there. With these companies, they're going to have to figure it out so they keep the NAV solid so the stock doesn't just belly up. And I believe they're going to find their way. I'm going to invest in them along the way. Now, what I do is simple. I write a covered call, and then I take those premiums and I buy dividend-paying stock. I have 12 monthly dividend-paying stocks that I use. I'll try to put them in the comments below. These are not recommendations. These are the ones that I buy, I use, and I collect monthly dividends so I can pay the bills, live the good life. So what I want you to do is do your own research. Understand why they're paying that dividend so you can feel good holding that investment. Now let's finish this up. I did say that I am doubling my house payment. Well, that's exactly what I'm doing. And this is a mindset play. The mindset is quite simple. I can make a profit and roll that into the next trade. And to be honest with you, I may lose it in the next trade. Or I could take that money and buy a dividend-paying stock just like I did with IWMY. Or one of the others that I do. We do that diligently. Every single time I generate some of the money that I do, we keep buying these dividend-paying stocks so we can keep generating that money, that monthly passive income. Or I could take some of that money and I can double down on a house payment. And you can do this with a car payment, house payment, pay down your credit card debt. I could take some of my covered call premiums and buy dividend stocks, which pay me monthly. I could take the other half and pay down my house, which, if you think about it, cuts my interest rate payments over the long term, which means I'm putting money back in my pocket. See, you have to have the mindset of a wealthy person. This is what a wealthy person does. You can go out and live the good life, but at the end of the day, let's have a legacy. And that legacy is taking some of these profits and buying passive investments or paying down debt. Because at the end of the day, debt is usually more expensive than the credits we ever put in our wallet. Hey, look, I want you to sign up for my membership. 1 free month offer, cptdashboard.com. It's in the description below. Look, subscribe to the channel. Bang that like button. It lets me know you like what I'm doing. Be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.